Yes, I wish I knew. Which I think is pretty much the same as the rest of the market. We're looking at some fairly unbelievable moves. But you're right, September, October do tend to be quite difficult. People come back after the summer. They reassess the narratives that have been going on in the summer and maybe come to a different conclusion. Now, in the last few years, maybe the last 2 years, this hasn't really happened, partly because, of course, there's been a lot of liquidity around. And we're still seeing this liquidity surging through the markets at the moment. It's a kind of a phony war in a way. We're seeing some pretty decent economic recovery figures, but also, as you saw with those Chinese auto figures a moment ago, it looks pretty good, say, from March, April, May onwards, even some of the predictions. But looking back over the year, it's still not been a great year. Valuations are stretched. So I think if we don't see some sort of pullback September, October, it will come. It just may be a little bit delayed this year.
It's interesting. I was at the Wall, you would have heard, talking about the Deutsche Bank note, where they talk about how this liquidity, this easing, seems to be concentrating itself in some very clear sectors of the economy. And we've seen better manufacturing numbers globally. And obviously, we've seen tech continue to do well, where it is not affected by social distancing measures. As you look forward, if we don't get any significant improvement in infection rates, are we going to continue to get relatively weak labour trends? And ultimately, that may cause a bit of blowback towards the central banks.
Well, I think that's probably the key issue. Up till now, and, as you know, I'm back in the UK for a little bit, and it's always interesting coming somewhere else to see what's happening. Up to now, there doesn't really seem to be much of a slowdown in what the consumer's doing. We've had so much support from governments. We had the furlough system in the UK. We've had support to people in many countries around the world. So the consumer hasn't necessarily been hit. And I think that once again, there's this patina of maybe slightly illusory confidence that people have with the market sort of coming along like this. And clearly, there's still an element of the wealth effect coming through. We haven't yet seen the traditional things you might see with a big labor pullback, which is restriction in spending, people cutting back on things and that having big impacts on other parts of the economy. It's going to be interesting because governments cannot support this kind of consumption forever. They're going to try and taper it. And when that happens, we may well see the kind of taper tantrums we saw with QE last time round.